Hello, welcome back. Mike from Canada and Wealth. It is Tuesday, November 21st. Time for Mike Reads a Journal. We are just going to be doing this one article today because for me, it is not actually Tuesday. It's the Friday before. I'm going to be traveling with my family for the Thanksgiving holiday. So, no markets today. These are Friday's numbers if you're looking at the screen. And this article, I could not have picked a better article for like it. Just if you're just going to do one, it's what's behind the market's wild overreactions. Fantastic read through. The description, as usual, will be in the link, the descriptions, and it starts talking around interest rates and inflation and why effectively the market movements we've seen both in the third quarter and fourth quarter have just been overreactions to what's going on. But I think the underlying story here is the story around the differences between the Fed for the last year and a half and the Fed before that, which is the Fed has never had such a well laid out plan that they stuck to, that people understood what was going to happen. And thus, when the market reacts how we don't think it should, it seems like an overreaction because, like, we knew exactly what was going to happen to interest rates. We didn't know what was going to happen to inflation, but we certainly knew what was going to happen to interest rates. And then when the Fed says we're done raising interest rates, and all of a sudden we get a bond market sell off and the stock market drops, it's just like, what is going on? And then, of course, we see this dramatic return over the last 2 weeks. And even financial advisors like us who are like, why is the market down so much? When it comes back that fast, you're like, hairs on the back of your neck stand up, and you're kind of thinking, "Oh boy, what are we getting ourselves into here?" But the Fed, their plan was so clear. In what I understand most people see as a crazy political world, we have to understand that the actions that the Fed were taking and the people running it, largely considered Jerome Powell, have seen unprecedented support. Appointed under Trump, reappointed under Biden, last confirmation hearing 80-19 Senate vote. Right? You don't see that type of unprecedented support. Um, so then the rest of the article talking about these kind of they're really not that wild swings in the market, but these kind of swings in the market, the discussion is around, war in Ukraine, the Middle East, everything coming out of the pandemic and all of that. People often think that, now is abnormal, but there was some time in the past that was normal and we need to get back to that. When I would tell you, I know this is like a hot take or whatever, the last 4 years have been perfectly normal. Went through a global pandemic, war in Europe, an extreme event certainly going on in the Middle East, and uncertainty, political tensions are very, very high. That's normal. That's how the world's always been. The future is going to be just like the past, which is a bunch of one-off events that no one saw coming that define that time period and make it seem crazy at the time, right? What was normal before the pandemic? The 4 or 5 years before that, this is not a political statement, but that was the Trump presidency, and I don't care whether you like or dislike Trump. It was a strange time for the world, right? We may have another strange time for the world here. Uh, Before that, you're talking about coming out of the global financial crisis, right? 2008, 2014 ish. The literally one of the worst recessions in modern history. Before that, you're talking about post 9/11, the wars in the Middle East, .com crash, right? And it just keeps going on. Cold War, height of the Cold War, Cuban Missile Crisis, Vietnam, World War II. Right? There was no normal time in the past. There will not be a normal time in the future. So to expect that the present is going to be anything different than a bit crazy, I think is selling ourselves short, right? So, it's talking about these swings in the treasury market, right? We've seen treasury volatility like it was back during the global financial crisis, and this was, the 10-year treasury went from like 4.5 to 5, and then now back to 4.4 already in the span of a month or two. In this bond market sell off, and during all this time, all the experts are like, I don't understand. Interest rates are not changing. And the Fed has told us that for months. Why are interest rates changing? Why are interest rates changing? Because all this crazy stuff's going on, right? And people are trying to guess what's going to happen next year. You got to remember the economy and the stock market, two different things. The economy we measure very accurately. Does not mean that we know what's going to happen in the future because of, we know what's happening in the economy. But the stock market's trying to predict what the economy is going to do in the future, right? And thus, even though the economy has been pretty steady Eddie through all this, shockingly through the interest rates hikes, stock market's just been all over the place because of it. So I could go on about this forever, but the world we live in is not as crazy as we all make it out to be. It's actually pretty normal. And the stock market is overreacting because that's what it does. It just moves with momentum these days. That's not how it was, let's say, in the 80s or something. But it's amazing if you go back and kind of what you think is crazy now, you compare it to times before and you realize it's really not that different than how it moved. A lot of times I'll do research on something like this and be like, oh, we see bigger intraday moves now than we ever have. And yeah, that like the data says, yeah, it's a little bit that way, but not in the way people. All right. I hope this has been informative, and I will talk to you soon. Have a very good Thanksgiving holiday, and we'll see you on the other side. Thank you.